There is exactly one single number that has successfully predicted every major bull run in gold and silver for the last 100 years. I'm not talking about it working most of the time, or only when the stars perfectly align. I mean every single time. Across 3 different geopolitical eras, through world wars and crushing recessions that wiped entire industries off the map, precious metals go parabolic, without exception. As of this Sunday, April 19th, 2026, that number is doing something it's only done 3 times in a century. It's nosediving toward zero. It is approaching the absolute floor, and when it finally crosses that line, the hard data says we are literally weeks away. History doesn't offer us a range of possible outcomes. It gives us exactly one violent, sustained, multi-year repricing of physical gold and silver. This transfer will shift a sickening amount of wealth from people holding paper to people holding metal, and it's happening right now. I'm not pitching some sketchy chart pattern or a technical indicator. I'm talking about a structural mathematical force inside the global monetary system. It operates like clockwork across generations because it's driven by raw math, not market sentiment. And the reason I'm hitting record today is urgent. The window between understanding this signal and watching the opportunity slam shut on the price chart is measured in weeks, not months. What I'm about to show you today is the single most important argument I've ever made, grounded in 100 years of data. It's never been wrong, and right now it's firing on all cylinders, so let's get one thing straight before we dive in. Asian guy here, we don't pump out a video every time silver bumps up 2% on a Tuesday. We don't chase weekly hype. We study the deep structural mechanics that drive precious metals across decades, and we drop analysis only at moments when it's most actionable. Today is one of those moments, and the thesis I'm about to walk you through is the same core argument I presented in Warsaw. The room was packed with institutional heavyweights and serious long-term whales, and across all the conversations, one topic dominated everything else. Nobody cared about the short-term price chart. They were entirely obsessed with the underlying engine, the repeatable pattern beneath every major bull market. By the end of this video, you're going to understand that engine better than 99% of Wall Street and see what the data is screaming. You'll finally understand why that little pullback in late January wasn't a breakdown. It was a giant, flashing accumulation signal. To really grasp what's happening with gold and silver right now, you need to understand the engine beneath it all. It's why central banks hoard gold. Silver refuses to spend any meaningful time below $70 an ounce this year, despite the massive and repeated attempts to short it. Our economy isn't just favorable for precious metals. It's structurally identical to the environments where gold and silver stage their most explosive moves. The concept is called the real interest rate. It's what you actually earn on your savings after the reality check of inflation. I'm not talking about the cute little rate your bank advertises. I'm talking about the actual return in purchasing power. If your savings account pays 2%, but your living costs are skyrocketing at 6% a year, your real rate is negative 4%. Your bank balance is going up, but you're literally getting poorer every single month, losing ground while feeling perfectly safe. It's the ultimate financial optical illusion, the exact deception that keeps retail capital trapped in paper assets while the smart money migrates. When real interest rates are positive, holding cash and bonds makes sense, but when they drop below zero, holding cash becomes a losing trade. When billionaires and institutions see a guaranteed losing trade across the entire bond spectrum, money moves into hard assets. Capital flows into things the government's shiny printing presses cannot magically manufacture more of. And it's happening right now. For nearly a century, no asset class has captured more of that migrating wealth than gold and silver, and that engine is igniting. Every major bull run in these metals has been preceded by the exact same 4 signals flashing at the exact same time. All 4. Let's check the scoreboard and see exactly where we stand today, because history is about to repeat itself. Signal number 1 is when government debt reaches mathematical impossibility, and I'm not just talking about large debt, but something so astronomical that no tax or growth can pay it off. At this threshold, governments can either default explicitly and crash the system, or they can quietly make the currency worth less until the real burden of the debt shrinks. Spoiler alert, they always choose option B, just like FDR did in 1934 by confiscating private gold, or Nixon did in 1971 by suspending the gold standard on a Sunday night. Today, the U.S. national debt is knocking on the door of $40 trillion, which is about $300,000 per household, or roughly 6 times the median annual income. This debt will never be repaid, because the only way out for the system is to trash the dollar. And right now, Signal 1 is firing in full view. Signal number 2 involves the rules changing in the shadows, where the rulebook gets quietly rewritten while everyone is distracted by the latest headlines or some new legislation. They're literally using the crypto ecosystem as a regulatory backdoor, trying to force artificial demand for treasury bonds onto a market that simply doesn't want to buy them anymore. The Federal Reserve publicly promised to shrink their balance sheet, but in December, they did a massive U-turn, creating brand new money for 8 consecutive weeks to buy debt directly. This wasn't because the economy needed a stimulus check. It was because the open market refuses to buy that much debt at current rates. Signal 2 is firing. Signal number 3 is the ignition switch where real rates go negative, and as of April 2026, real interest rates are sitting at approximately 0.4%. With real-world inflation eating your lunch, real interest rates are mathematically set to cross below zero in the coming weeks, which is simple arithmetic rather than speculation. Signal number 4 is that the money printers are buying gold, and the very institutions printing the fiat currency are frantically exchanging it for the one thing they can't print. Last year alone, they scooped up nearly 1,000 metric tons, as nations like China and Poland and India are dumping dollars and stacking metal like their lives depend on it. Goldman Sachs called it the most aggressive central bank gold rush in history, where the guys running the global monopoly game are finally voting against their own paper. All 4 signals are lit up today, and every previous time they aligned, the financial world flipped upside down, like when gold skyrocketed from $35 to $850. We saw it move from $250 to $900 in the 2000s, and then from $1,050 to $4,129.40, which is where it closed this past Friday. But here's what the mainstream suits fail to tell you. Gold at $4,800 is just the confirmation signal. Silver is the actual opportunity. While gold has been successfully repricing to match decades of currency debasement, silver is like a coiled spring and hasn't even finished catching up yet. Silver has a secret weapon because it's not just money. It has a second engine running at the same time, which is an explosive industrial demand story. Solar panels and defense tech and electric vehicles require silver. The entire 21st century physically requires this metal, and there is simply no substitute. You can't just print more geology. And when explosive monetary demand crashes into a physically constrained industrial supply, you don't get a price bump. You get a rocket ship. Institutional smart money doesn't send out a press release when they're front-running a market, because by the time you see it on a chart, they've already positioned themselves. You have to look at the boring stuff like logistics and unread corporate filings, and the fingerprints of this movement are visible everywhere right now. Late last year, U.S. refineries were operating at such max capacity they were turning away new silver intake, likely because secretive government contracts were consuming all their capacity. The Pentagon is dropping hundreds of millions to build a massive mineral smelter in Tennessee with J.P. Morgan, specifically engineered for metals including physical silver. Governments don't build that kind of massive infrastructure or partner with global banks if they think an asset is irrelevant to the future of the financial system. My favorite piece of the puzzle is the data from Hecla Mining, where the market price was $55, but they reported a realized sale price of nearly $70. That's a 25% premium, which never happens in normal business, suggesting a massive and price-insensitive buyer like a government is quietly locking down the entire physical supply. A sitting member of the Critical Mineral Subcommittee bought stock months before that premium was disclosed, which is just another lucky coincidence in a world full of them, right? The insiders and the government are already positioned while the infrastructure is built, yet retail investors are still scratching their heads wondering if $80 is too expensive. Here's the terrifying math that makes this cycle unique. As the global money supply is now over $100 trillion compared to just $16 trillion back in the year 2000, they expanded the currency supply by 6 times in 25 years. But silver mines and physical stockpiles haven't grown at all, and the deliverable bar inventory remains strictly limited. The physical silver market isn't an ocean but a reservoir with fixed walls, and we're about to point a $100 trillion fire hose directly at the tiny little space. When that much capital tries to squeeze into a market this tiny, it produces violent and vertical expansion. So don't tell me silver is expensive at $80. Let me blow your mind using the phone in your pocket. Because since 2007, the price of an iPhone in dollars has gone up about 60%. We just shrug and call it inflation, but if you price that same phone in ounces of gold or silver, the cost has actually fallen by nearly 80%. That same phone is 80% cheaper if you saved in metal instead of paper, which is absolute proof of how metals protect you while currency destroys your wealth. The dollar lost and the metals won, even though the financial press is screaming about Iran and oil prices to distract you from the actual math of the situation. They'll tell you higher oil hurts industrial demand, so you should sell your commodities. But that's total garbage, designed to keep you from holding the real winning assets. Geopolitical chaos drives energy prices up, which actually accelerates the urgent need for solar tech and domestic manufacturing, both of which suck up massive amounts of physical silver. Besides, what do governments do during geopolitical crises? They spend money they don't have, and they print more of it, making every dollar in your pocket worth even less. Every new dollar printed makes cash a worse asset and physical metal a better one. So don't let headline noise shake you out of the math of the decade. If you want to actually capture these gains, you have to hold the physical metal, because buying a paper silver ETF is just a structural contradiction for your portfolio. You're trying to hedge against a broken financial system by buying a paper promise issued by that exact same broken system, which makes absolutely no sense in the long run. When you hold a physical coin, the counterparty risk drops to zero, as no bank can freeze it and no Fed chairman can ever print it away. It's yours. It doesn't pay a yield, but in a world where real interest rates are crashing below zero, those income-generating paper assets are exactly what's making you poor. This bull market started in 2002, and the problems never got fixed. They just compounded and got 100 times worse while we were all busy looking elsewhere. The next major leg up is triggered by real interest rates finally crossing that zero line. And that moment isn't behind us. It's literally staring us in the face. The number sits at 0.4% and is dropping fast, so don't wait for the price chart to prove me right, because we are only a few weeks away. By the time the mainstream media tells you why silver is exploding, the window of opportunity will have already slammed shut, because that's just how the wealth transfer works. You've seen the hard data, and you know the exact mechanism. So if this deep dive analysis gives you an edge, hit subscribe and ring that notification bell. We don't post just to hear ourselves talk. We post when the signal is undeniably clear and consequential, and I haven't seen it this clear in many years. This is Asian Guy, and the indicator is crossing, the window is finally open, so make sure you're positioned on the right side of history before it's too late.